Hello guys, you're all welcome to today's tutorial on what is spread. Before we go into today's topic discussing what is spread, I want to use this opportunity to invite you all to please smash the like button, subscribe to our social media platforms. You can find us on YouTube, TikTok, Instagram, Facebook with the name Tradersroom. So that whenever we post our content, you'll be able to see this content and be able to learn on forex trading. So we go to today's topic, what is spread? Well, when you ask me what spread, what I will simply say, I'll say that spread is the amount of money, the commission that you paid in order for you to be able to do trading or to get into trading. Let us look at our diagram here. If we look at this order, here is the sell area, which is the amount to sell, and while here is the buy area. So when you look at these two areas, the sell and the buy, here at the middle, you will find out that there is a number here that is moving. Now it's 1.8, 1.7, 1.8 is changing, 1.9. So that is this spread. Now it's not 2. So spread is the amount that you pay in order for you to get into market. Let's say, for example, just as you get to 2 now, you want to buy, and this is the amount that you can buy this currency, which is USD and the Canadian dollars. This is the amount you can use to buy this currency. This currency is going to be this amount plus the amount of spread. That's why once you enter into trade, the first thing you find out, you are on red. Spread has been taken away from your money. You cannot get into trade without paying, or your broker not taking away the money for spread. Then in this area, you find out that when you are selling, what the broker will do, since we are on 2 now, is 2 away. We will subtract 2 from these total amounts. So that is the number of spread. Let me put something on the chart here for you to see how spread can affect us at times. Let's say, for example, we are here on the trade, on our chart. You'll be studying this market. You say, oh, this market is now bullish. Here it trades back, it comes up, it trades back, it comes up, it trades back. So, okay, now I want to get into the market. In order for me to follow the trend. So let us now take our drawing and we put it here. So looking at everything, so where would be the best place for me to put where I'm going to put my stop? Since we are on trend, if I put it here, it could have been okay. Let me just take it down a little to this area. Since we are just getting into the market, you say, okay, let's say, for example, you say, okay, I want to take it to ratio of 2.3. Well, as we all know, that's a very good, a nice ratios. Then by the time you click, you go out, you set up your trade, you say, okay, you come back. By the time you come back, the trade is like this. But since the trade is like this, you look at this place, you say, oh, yeah, I'm able to get this trade. Yeah, this trade was okay. That's nice. But you get into your account, what you find out is that your account is on red. You've lost the trade. Well, at first instance, when you look at this trade, you say, oh, this person who won this trade. But look at something here. Here at the end of these, we might find something here. If you find out there, this line, this cell did not get to the end where you place your drawing. But why is it that the market take you out of the trade before it could hit the target up here to nowhere, or you are already out of the trade? Something that happens there, that's what we call spread. It might be that at the initial stage when you set up your market, instead of you getting your starting your market here, your trading here, it's possible your trade starts somewhere here, which you might not know or you didn't take note of. And that's as a result of a spread. But because of spread, here is where the market actually take you out. Here is your stop loss. But since you did not put on to consideration what spread is, or you don't know what spread is, or you are not taking note, or you do not show importance to spread, you just lost this market where you saw this trade where you're supposed to get a lot of money. So what can we do in order for us to stop something like this happening to us when it comes to spread? At times, there's little we can do. We cannot do much because none of us, I would say about maybe this is just my estimate, maybe about 99% of us that are into trading, we don't have our own software to use in trading, or we are not brokers. So this is the amount the brokers take from you in order for you to be able to execute trade. But how can we be mindful of the spread when we are trading, or what can we do? What are the little things we can do about it since we cannot erase spread from trading? So one of the things we should do, I will talk about time frame. When it comes to time frame, for example, here I'm on 5 minutes time frame. And five in the terms of time frames, when we are having time frame, maybe we want to get pips. Maybe we are only talking about 10 pips, or maybe at most we might be talking about 15 pips. Those are little pips. In that money is not big enough for us to be losing this amount here, this 2.1. Because that will be subtracted away from the money that we are making. So if you ask me, I'll say, if you are new to trading or you are just learning, it is not good for you to go into low time frame. You should look for a high time frame in order for you to be able to have a large numbers of pips that will help you to pay for your spread, the amount that you're supposed to pay in order for you to get into trade. Another thing we need to check here is the time frame. Is the actual time that we want to trade. If it is a time whereby there are not a lot of people trading, we'll find out that something might happen. The spread will be high. But when there are a lot of people on the market trying to buy, trying to sell, spread usually comes down. So meaning, if you want to have a low spread, you should try to look according to your own time zone. Check what time of the day of the night do these spreads come down. Okay, those are the actual time I will get into trade. Or you can look for the major currency pairs. In most cases, not in every cases, that is when you find out that these currencies goes down. At times, when you check, another thing you should check again in terms of currency pairs, some of these currencies are very expensive. While there is a trade I was looking at, I was trying to get into a trade. Let me check whether if I can get into that. Suppose it was US and Mexico pesos. Let's see what the okay. Just for example, we come to this place. It's telling us that the spread is $76 to get into this trade at this particular time I am now. So if you are a new trader, maybe you are not even trading with $72, or you only have $100 that you want to trade with. So if your broker should take away this, how much are you trading with? So all of these affect. Check, always pay attention to your spread and know at a particular time also that you need to get into a trade. So that can help you in order for you not to fall into these trade issue or this spread issue, taking you out of the trade, or even when you win a trade at times, you are unable to get your money. It still take you out. Let's say, for example, let's keep going, or let me say, for example, in some area, you might find out that, oh, let's say this was down to this area. At times, you find out that in some trade, the amount of money, if the candlestick pass through your drawing or your take profit, then you are unable to take profit. It won't stop. But by the time you now come back later in the day, you say, okay, let me check uh, what I've been able to do. You just find out all of a sudden everything comes down and you are being taken out of the trade. That equally happens because of spread. So with what I just said, in order for you not to have, in most cases, this incident is something that you cannot do against because it will always come up. It is the amount. You do not have your own software. I do not have my own software. I'm not a broker. We are not brokers. Brokers, they need to be paid also. This is the amount of money they collect from you, and that's how they make their money also. So apart from this time frame and the time frame you trade, and at the same time, the time you get into the market, there is something you can equally do when it comes to reduce your spread. That has to do with your broker. Sorry, please. Let me go to my broker here. But also see some of the things you can do also in order for you to reduce the amount of broker. For example, I use the Oanda. Say in this area that talks about my pricing option. So me looking at this area in my brokers, you will find out that I use the spread area. It says your current pricing. So if I want to say, okay, I don't want to use this spread alone, I want to reduce it, the next thing I can do is go into core pricing. I leave the spread only pricing and go into core pricing. And in the area of core pricing, you pay commission with a very low spread. But if you check under here, it says available for traders with a minimum balance of $10,000. It's possible you don't have that amount of currency on your account. So if you don't have that amount of currency, automatically you are ruled out. You cannot go into this core pricing system with Oanda. Well, I know different brokers with different rates, so you can check with your brokers how much you need to use or how they operate some things like this. But in this area, you find out that you have an option of commission and an option of low spread. So when you are here, this means that you will be able to have an options and you'll be able to get it. But in the area of spread spread only pricing, there is no commission. But here you find out that there is commission. So there is also another special offer, which is the Allied Traders program. Yeah, these are for Allied traders, for companies. They trade a maximum of a lot of money every day, and they have a lot of tradings that they place daily. So that can make you to qualify with this. If you want to know more about that, you can go into your broker's website and try to look for pricing and check out each of these, how it affects you and how you can be able to reduce or how they can help you so that you pay low price. But all of this depends on your style of trading and the area you are in trading. So in the area, for example, somebody who is just getting into trading cannot go into call pricing. So even if it gets into it, maybe it might say for you to get into the trade, you have to pay $10. And for you to get out of the trade, you have to pay $10. So how much are you trading? So all of these are something that you have to put into consideration for you to say if you will go using your spread only pricing or the call pricing or the Enlight trader program. So that's all I can tell you about spread. Spread actually is something that is inevitable, it's something you cannot drop because we must pay for the amount, a certain amount in order for us to get into trade. But however, there are some things you can do just as we have highlighted that can help you to reduce the number of the damages spread can do to you if you do not put them into consideration. Well, thank you very much, guys, for listening to this. Before you go, click the like buttons, share our videos, subscribe to our social media platforms so that you can always get informations like these. Next time, in the next video, we are going to talk about technical analysis. Firstly, we'll be talking about the candlesticks. Have a wonderful day and see you some other time.